Hello, y'all. First time home buyers checklist. Things that you may need as a first time home buyer. I will touch on them. I got about 6 things that I want to talk about: income, credit score, DTI ratio, how long you've been employed, what are your savings, estimate future mortgage payment. My name is Mercado from eXp Realty, your homeboy, the realtor from New England to the Sunshine State. I'm your guy. I'm gonna touch on a couple of things. If you like this video, please hit the like button and subscribe if you'd like to see more of my crazy freaking videos. Anyhow, I am here in my mansion. So many blessings to y'all. I love y'all so much. So this is near and dear to my heart because I really love helping people, and I kind of want to make sure that I'm guiding you guys the right way. Which way? Maybe that way, maybe that way. I don't know, but let me make sure I keep you here, right? Most important thing, one of the things that we need to talk on is income. We need to consider, you do have to be making enough, right? And you have to be employed for at least 40 hours a week. Again, I am not a lender. Some of the things that I am talking about, it's more of a lender's language, but I wanted to guide you to better assist you so you know exactly what the bank kind of wants. Sometimes when you call me, these are some of the questions that I do ask you. So income is one of those things. How much do you make, right? By the hour. Are you on salary? Are you paid by the hour or salary? Are you self-employed? So some of these things will play a major factor on how you get qualified and how the pre-approval process works. Income, I know it's one of those things that the banks will definitely look at, okay? They want to know how much are you making, how much you made in the last 2 years. So income is a huge thing. Make sure you guys are putting in your 40 hours. Make sure you at least, usually you want to make at least a bare minimum is $20 an hour. If you make it less, it's not a big deal. We just got to find alternatives to get you pre-approved, maybe a cosign or whatnot. That's something to have a conversation with a lender. Number 2 is credit score, right? Sometimes we have a misconception. Oh, we need a 700 to 800 score to qualify for a home. 90% of the time, that is not the case. Let's consider the factors for conventional loans. If you're trying to put minimal down payment, meaning you do qualify for as low as 3% down as a first-time homeowner, and if FHA or government loan, I believe it's 3.5% down. Obviously, you have your USDAs that are 100% financing, your VAs if you're military. Those I usually don't touch on. I will touch on another video. Primarily what we focus on is FHA and conventional, right? One is 3.5%, which is the FHA. The other one is 3% down as a conventional. And they do look at scores differently, right? A lot of times conventionals are looking at 680 or higher. Whereas in FHA, because it's government backed, right? The credit score for that is usually 620 or higher. I've heard of situations where it's lower than 620, but I've yet to deal with anyone that has a low credit score that could close on a property with under 620. 2 buyers ago that I closed, 2 properties ago that I closed on, the buyer actually had a 580, 590 score, but he made enough money to pay down his credit cards. By the time he went to closing, he paid his credit cards off, his credit score shot up, and he was qualified. So that's sometimes, again, this is sometimes that the lenders, when you speak to them, they will guide you as to what exactly you need to do. Another thing that they look at is your DTI ratio, which is your debt to income ratio. Depending on the program that you're in, conventional or not, or government program, it all varies what the banks want, right? A lot of times there's what's called the 30% and 55% front end, back end. Which one is which? I don't know. I do know this much, right? Usually the 30 to 35% front end or back end is where they calculate your expenses that are on your credit report, right? Which is your debt to income ratio. That means how much do you make a month, right? So let's say you make $100,000 a year. They divide that by 12 and they calculate that monthly, right? Based on that monthly, 30% of the debt on your credit score cannot exceed, right, to your debt to income ratio. This has to be about 30%, 30 to 35%. Then you have with the mortgage, which is your PD, which is principal, interest, taxes, and insurance. That's what they calculate front end and back end, right? Or back end and front end. Whereas you have your personal, debt, and plus on top is the debt of your property. Those two combined together cannot exceed a certain amount from, it's called your debt to income ratio. Okay, if it's confusing, talk to me. We'll go over the phone to go over this and talk to the lender so they could better guide you as to which one is which and how that works, right? Number 4 is how long you've been employed. So a lot of times, if you're self-employed, a lot of times they took for 1 year of employment, right? Self-employed. But if you're employed through a company, they look for 2 years of history, right? They want 2 years of tax returns. They want 2 years of W-2s. Very important. Make sure you get those documents together, have them ready. A lot of times people don't know where to get those. You got to go to the company's HR department. They could help you provide those documents, right? And then your savings. It's important to have some money in your savings, obviously, because you do need some money for closing. Some of you may need some money for deposit, depending if you get into some of these local state programs where they help you with the down payment. A lot of times some people don't like that because you qualify for less. So you do want to make sure you have some money saved up. If you have 401k, you could use money from your 401k to use for deposit. Ideally, again, you want to save 3 to 3.5% in your savings plus your closing costs, which is 2 to 5% of the purchase price, right? Whatever you're pre-approved, you want 2 to 5% of that. Usually that's a common little rule of thumb that you could use. Number 6, obviously we're talking about estimate future mortgage payments. Make sure that you understand what are the payments associated with purchasing a property. We tend to forget that it's just mortgage, right? But it's not. There's a couple of things that play a major factor in that whole mortgage process. Remember, we have PITI. PITI is principal, interest, taxes, and insurance. PITI, don't have pity for me. Please don't. It's okay, my blue, it's fine. But, these are PITI is what the banks use. Principal, interest, taxes, and insurance are associated. Taxes is your taxes of the properties. Insurance is the insurance of your property. The principal means the principal of the loan. This is what you're going to pay that you're going to end up having equity if you sell your property. And the interest rates is what the banks are charging you, right, for the loan. So see, these are some of the things that are associated as a first-time home buyer's little checklist. Remember, it's important to make sure you have all your ducks and all your eggs in the right basket. I don't know why I said ducks. I think I just saw ducks earlier. Never mind. Don't worry about that. But either way, again, it's Emilio Mercado with eXp Realty, your homeboy, the realtor. Feel free to call me 860-938-0549. And don't forget to like and subscribe. Please show some love. I love to help you guys out. And the way I could help do that is by creating more content for you. The more you like, the more you subscribe, the more my content gets pushed out to more people. Peace out. You only live once. Have a good one. Take care.